Olá! Nesse vídeo nós estamos recebendo o Salvatore Bruno, Senior Research Analyst da Nasdaq, que veio nos visitar aqui em São Paulo em sua primeira visita ao Brasil e vai conversar com a gente sobre o cenário dos ETFs americanos, vai contar um pouco para a gente sobre a Nasdaq e o Nasdaq 100 e vai falar também sobre algumas das principais tendências que ele tem visto lá nos Estados Unidos. Então vamos lá para o nosso vídeo. Welcome to Webull, Brazil. Today we have here Salvatore Bruno, Senior Research Analyst, Nasdaq Global Indexes. Salvatore, it's a pleasure to have you here.
It's great to be here. Thank you so much for the invitation.
Let's start with an overview of the US ETFs landscape. For the Brazilian audience that has never or has fewer contact with US ETFs, they're newer to that kind of product. How would you describe the US ETF market today?
The US ETF market is huge and growing rapidly. So we have just passed over 13 trillion US dollars in assets under management in the US ETF market. Globally, that's over 19 trillion in assets. So the US represents about 70% of the global ETF asset marketplace, despite the fact that it actually only has about 1/3 of the number of funds are actually listed in the US. So definitely a strong footprint. In terms of growth, we've just surpassed $1 trillion in net inflows for 2025. We're on pace to break the previous record of 1.1 trillion in 2024. So we're seeing very strong growth in the US ETF marketplace. It continues to be a dominant part of the global ETF landscape. And it's been an amazing growth story.
Yeah, I just saw on the news that today you have more ETF than stocks in the US market.
Yeah, it's interesting. And some people point that out as maybe that's a problem. But if you think about, I think about it as almost as cooking, where you have a certain amount of ingredients, but how you put them together, you can make almost an infinite number of different foods or dishes. And that's sort of, I mean, stocks are those ingredients and ETFs are the final product, but it's really how you combine them. So you can get a multiple of number of ETFs versus the number of stocks that are listed.
How do you see the changes that has been happening in the past few years in this ETFs landscape?
We've seen a lot of changes. So when ETFs first started, they were primarily what we call beta securities. So giving one-time exposure to a group of assets in an equity index. About 5 or 6 years ago, the SEC, the regulatory body in the United States, made a change to the way that they sort of allow people to create new ETFs and made it much easier for firms that want to create ETFs, and actually started blurring the lines between active ETFs and passive ETFs. And so what we've seen over the last few years is a massive increase in the number of passive ETFs. In fact, there are now more of the US ETFs are active relative to passive. So we've seen a massive increase in the active ETFs over the last 5 years or so. Most of the assets are still in passive, sort of those equity beta. But on the margin, we're seeing more and more growth in terms of number of funds and in terms of asset flows starting to move towards these active ETFs.
Let's talk now about Nasdaq.
Sure.
I'm sure everyone here in Brazil already heard about Nasdaq.
Yeah.
And before we talk about the Nasdaq 100, what can you tell us, how can you explain what is Nasdaq, how does it start, and what it represents in the market today?
So Nasdaq is one of the original fintech companies. Starting in 1971, when Nasdaq opened the doors, it was the first fully electronic exchange. So it really sort of bridged the world.
The first one.
The very first fully electronic. So I mean, it fully bridged that gap between finance, obviously stocks trading and operating exchange, and technology because it was fully electronic. And starting that year, we had one of the first IPOs was actually Intel, the semiconductor company. And that sort of set the stage for Nasdaq becoming the destination for many of the most innovative companies in the world who want to list on Nasdaq. And since then, we've had sort of a who's who of who are the largest tech companies that have listed on Nasdaq, starting in 1980 with Apple, Microsoft, Google, Meta, the parent of Facebook, Amazon, NVIDIA, Broadcom. I mean, the list goes on of sort of the biggest, most important names in technology that have just started to list on Nasdaq. So that's really what Nasdaq is all about. It is sort of we call the Nasdaq 100 the benchmark of the 21st century because it really represents sort of the blueprint of where the world is going.
Great. Now, Tell us, what is the Nasdaq 100 that you just mentioned?
Yeah, so the Nasdaq 100 is a select list of companies that are listed on Nasdaq. It is 100 of the largest companies that are listed on the Nasdaq Stock Exchange, excluding financials and REITs. And so it represents really kind of the elite, sort of the upper echelon of companies that are listed on Nasdaq. It came out in 1985, so we just celebrated our 40th anniversary, January of this year. And it's been a tremendous commercial success as well as investment success.
So Nasdaq was born like as a first digital, 100% digital, like say
Exchange.
Yes. And is known as the technology stock exchange.
Yeah.
But you don't have only technology companies there, right, today?
No, that's correct. And when we think about sort of technology, I think about innovation. And there are companies inside the technology sector that are developing the tools to enable innovation, but there are other companies in other industries that are using those to propel their own industries forward. So things like consumer discretionary and a company like Amazon. So they're using a lot of the tools that have been developed by some of the other companies to really revolutionize the cloud, as well as sort of shopping and home delivery and other things that they're getting into. Companies in the healthcare space are using some of the technologies developed by Nasdaq listed companies to really further enable better delivery of the healthcare system. So it's technology, but it goes beyond the technology sector, because technology really permeates every aspect of our lives. If you think about, everything that you do from the time you wake up in the morning and you check your iPhone and you buy something on Amazon to, playing video games or using NVIDIA chips, it basically is everything. You use Microsoft Teams at work, or maybe using Adobe, to create a presentation. These are all Nasdaq listed companies. So it really touches the Nasdaq 100.
Webull now is a listed company.
Webull is listed there. So you're trading. So almost everything you're doing in the world today, in your daily life, is sort of affected and driven by one of the Nasdaq 100 companies.
How could you explain how the index is weighted? Like with so many large companies, and most of them related to innovation, technology. How is it weighted?
So it's weighted by market capitalization. So the bigger companies by market cap get bigger weights, but we do have constraints on that. So in order to maintain, so for US ETFs and mutual funds too, they need to be organized as registered investment companies, RIC. So we call those RICs in the US. And those are important because they get better tax treatment than a standard corporation. In the US, standard corporations will basically have to pay taxes on their income, and then when they distribute a dividend, the investor who's getting that also pays a tax, so they're double taxed. With a RIC, you don't pay the double tax. So all of the dividends that the ETF receives, it passes through untaxed down to the end investor, so the ETF is not paying taxes. So you want to maintain your RIC status in the US. The way to do that is you have to meet certain diversification rules. So no individual stock can be more than 25%. So we have limits on a quarterly rebalance or on the annual reconstitution that set sort of the maximum weight on any individual name to make sure none of them breach the 25% limit. There's also another rule that any securities that are over 5%, if you add them up, they cannot exceed 50%. So we call that the 550 rule. So we have limits on anything over 4.5%. That group has a maximum weight to keep us well below that 50%. So it is a couple of purposes. One, you want to maintain the RIC status for the favorable tax treatment. Two, it's a benefit to investors from a diversification standpoint. So it doesn't get overly concentrated in any individual name and helps spread it out so it's that not one group is overly concentrated as well.
And maybe for people in Brazil who wants to start investing in the US, ETFs might be this entrance for them to the market because they already get to this diversification, not only because of the companies that they have in there, but because of all these rules that you have, like how it's weighted. So it's the best way for someone to start, right?
It is becoming the vehicle of choice, especially for younger generations. So we see a lot of studies look like 18 to 34-year-olds more and more are increasingly adopting the usage of ETFs. And it makes sense because a lot of people don't have the wherewithal or the interest in selecting individual stocks, but they want to get exposure to the growth potential of a market or a theme. ETFs are a great way to do that. They are relatively tax efficient in the sense that they pass through the dividends, so they're not paying double tax. They typically don't distribute capital gains, ETFs in general, because of the way that the inner mechanism of rebalancing and dealing with inflows and outflows, it's done in kind, which is a favorable tax treatment. They tend to be cheaper than mutual funds, often by about 2/3 cheaper, and you can trade them every day. So you can trade them intraday based on something that's going on in the market right now, as opposed to a mutual fund where you have to wait until the end of the day and collect it at you transact at the NAV, sort of at 4 p.m. close. You also have great transparency into the holdings because ETFs publish the holdings every day, so you know exactly what you own. So if something's happening in the market and you know you have exposure to that, you may want to add more to it, you may want to sell out of it. ETFs are a great vehicle to allow people to express those views and get that exposure to the long-term growth potential of the equity market.
And how do people access, like people who are starting now, how do they access the Nasdaq 100?
So there are two primary ETFs that are listed in the United States, QQQ, which is the Invesco Trust. There's also a sister fund of that, QQQM, also by Invesco. Combined, they have over $600 billion in assets. So very large, they trade all the time, and that's really important. The liquidity on these is great. And why you care about liquidity is because when you're trading an ETF, it's kind of like trading a stock. If something doesn't trade very often, the bid-ask spread can be very wide because market makers are not active, they're not making markets in that on a continuous basis. When you have ETFs the size of the Qs or QQQM, these are trading all day, every day. So that spread gets very, very tight, which is a greater experience because you're typically paying the higher price to buy and getting the lower price to sell. The narrower that range is, the better the outcome is for end investors.
And what's the difference between those two ETFs?
So it's a little technical. QQQ is technically a trust. QQQM is an ETF. They basically operate exactly the same. It's sort of no difference for end investors. QQQM is a little bit cheaper than QQQ. QQQ actually has a little bit more assets and a little bit more liquidity. It's probably more of an institutional ownership base. So you see a lot more trading from institutions there. But QQQM is a little bit cheaper for retail investors. But for your end experience, your net return is very, very similar between the two.
Before we go to our next topic to talk about trends, is there anything else about the Nasdaq 100 that you think would be relevant to bring to the Brazilian investors?
Yeah, I think, at the end of the day, the Nasdaq 100 is giving people exposure again to those largest companies that are really driving innovation. We call it the blueprint for the 21st century, or the benchmark for the 21st century. And I think that's really important for end investors who want to get access to sort of very high quality companies, tremendously strong balance sheet, growing earnings. Nasdaq 100 companies are on pace right now. We were just in the middle of earnings season for the third quarter. They're looking to post right now about 15% earnings growth year over year, which is extraordinary for companies the size that we're talking about. In fact, last quarter, they grew 35% year over year. So we're on pace for our 10th consecutive quarter of double-digit positive earnings growth. And that's really what's been propelling the outstanding performance over time that we've seen for the Nasdaq 100 companies. So these are large companies. They're tremendously well capitalized. If you look at sort of their debt ratios to net to equity or to assets, they're very, very strong. Their coverage ratios on their debt's very strong. They're generating tremendous amounts of cash, and their earnings are growing. So we think these are very solid companies that comprise the Nasdaq 100 at this time.
I saw some interesting data recently that back in 2008, when you look at the 10 most valuable companies back there, 4 of them were American. 4 of them were from Europe, and 2 of them were from Asia.
Yeah.
You come to 2025, out of the 10 most valuable companies in the world, 9 of them are American, and 1 is from Arabia. So what does this show us?
It shows, I think, sort of the American spirit of innovation, because really what's happening since, you came out of the 1900s into the 2000s, and a lot of the benchmarks in the 1900s, especially in the US, were kind of geared towards the industrial revolution. And you had a lot of industrial companies, energy, financial companies kind of dominated the index makeup in the 1900s. Now you move into the 2000s and we're out of the industrial revolution, we're into the technological revolution. So it's the companies that are leading that revolution, those are the ones that are primarily American companies. So that's what we're seeing is really that rotation into the technological revolution leaders, which are listed, many of them, most of them on the Nasdaq.
Yeah, that's really interesting.
Yeah.
Now that we're talking about like how the shift in the industry, let's talk about trends.
Yeah.
What are the trends that you have been seeing happening now in the US?
Yeah, so as I mentioned, in the US now we're seeing active funds are now more than half the funds relative to passive funds.
To give an explanation, what's the difference between an active fund to a passive fund?
So a passive fund follows an index, and the index has a strict set of rules that dictate what securities will be owned, how much they'll be weighted, how it will be rebalanced, and basically the index is run according to that rules, and the ETF, their mandate is to track that index as closely as possible. Active funds allow the portfolio managers some discretion on any one of those aspects. So it could be, and it runs a range from fully active where the PM is the portfolio manager is making the stock pick, they're deciding what the weight should be, when to buy it, when to sell it. That's sort of truly the most active. Then you have sort of the kind of active, which are based on a benchmark, but it gives the portfolio manager a little bit of discretion. So an example of that might be something like a covered call ETF, right? And so for those who are unfamiliar, covered calls are you own a basket of securities, so you are long those and you get that return. You also sell a call option against those securities a little bit out of the money, so you keep some of the upside, but you collect the premium for that call. And it helps to improve the income distribution for the asset. In those, many of those are active. The securities that they're owning, in this case, maybe they're owning the full Nasdaq 100. And when deciding which call option to write, they have some discretion. Whether it's going to be a 1 month out, maybe it's going to be 5 weeks, where they're going to set that strike price, how far out of the money it's going to be. They might have some discretion there. So that would be an active ETF. But again, that's on more of the less active versus sort of the traditional active stock picking. Mm-hmm. So it really runs the spectrum on the active ETFs.
What other trends have you been seeing?
So taking advantage of these actives, we're seeing a lot of option strategies. The covered calls have become very popular in the United States, and we're seeing a lot of assets flowing there. We're also seeing options being used to help protect some downsides. So these are called buffer ETFs. And basically what that is you own a basket of securities, again, maybe the Nasdaq 100, but now you buy a put option. So, and maybe you do that kind of at the current price. So if the price goes down from there, you're put protected, right? You have the option to sell that back at that price. And so, but those put options can be a little expensive. So maybe they buy a put at the money and then they sell a put a little bit further away. So maybe it protects the first 10% or 20% of the downside. And so those are called buffer ETFs. Those have become very popular as well. So overall, the trend is becoming using options on existing indexes to sort of change either the income profile or the risk return profile.
That's very, very interesting. Yeah. What other trend have you been seeing?
The other trend that we're seeing is thematics. So a thematic is sort of a group of stocks that's really capitalizing on a trend, a macroeconomic trend. So some of the most important ones that we're seeing right now are cybersecurity. So cybersecurity is becoming a digital utility. If you think about when you run your business, you have certain things that you have to have. You have to have electricity, you have to have water, you have to have office space. You have to have cybersecurity. It's becoming that important. And so there are companies that are really developing the defenses and continuing to have to redevelop, because with the advent of AI, the bad actors are using AI to improve their hacking capabilities. So now the cyber defenders are using AI so it's an escalating arms race between the hackers and the defenders. Mm-hmm. So the spend on cybersecurity is massive. And there are companies that are really trying to provide that. And you can access those through ETFs that provide exposure to cybersecurity. Another major trend that we're seeing is renewables. As the world is moving towards more renewable energy and moving away from fossil fuels, there are companies that are leading that revolution. So a couple of sub-themes on that. One is the generation of renewable energy and power. The other is actually forming the new electric grid to actually enable the new power sources, because the old grid was sort of one way, right? You had these coal-fired or natural gas-fired power plants that create the electricity. It gets transmitted through the grid to the end user. you now have end users generating their own electricity through solar panels or wind. So now they're going back into the grid. So you need a two-way grid. That's a massive upgrade and spend. The current grid is about 50 years old. So there's a huge capital expenditure required to upgrade the grid, make it more durable, more resilient, make it two-way, and allow for not only the use of renewables, but also battery storage, which becomes very important in the solar and wind world.
That's really interesting for our market in Brazil, because when you look to our local stock market, if you look to volatility, or if you look to liquidity, you basically have commodities, finance, maybe retail. Not much more than that.
Right.
And when you look into the US, you already have like a lot of options, but now you have all these thematic ETFs that comes with this innovation wave that is coming, that opens a really broad opportunity for Brazilian investors, like to diversify and get into this new wave of innovation that's coming.
Yeah, and that's sort of, everything sort of happens on an evolutionary scale. So you start out in the US was the same way. It started out with, the very first ETFs and for a long time, they were simple beta exposures, whether it be to S&P 500, Nasdaq 100, maybe some international markets. And then you started to get bond ETFs coming out, and then you got commodity ETFs coming out. And they were still sort of beta one, just in a simple exposure to a basket. And then you started to see thematics start to come out. And then you're starting to see options. So it's really an evolutionary process. The US is very far along on that, but continuing to see innovation in the product set that's coming out. So, these option overlays are probably only 3 or 4 years old, and they're really starting to hit their stride in terms of bringing in assets. We're seeing continued innovation in the US ETF marketplace, things like auto-callable ETF. So an auto-callable, for those who aren't familiar, basically it's sort of a note that a bank issues that pays a very high coupon. So investors love it because it's a great yield, but it has a call provision in it that automatically gets triggered based upon some preset level of an equity index. So whatever that equity index is, if it drops by a certain amount, the bank automatically calls the note back. And so you have ETFs now that are buying series of these and wrapping them into a wrapper, very attractive yields for the end shareholders. So it's just an example of the innovation that we're seeing in the marketplace today that continues unabated in the US.
Wow. Is there any other trend that you have been seeing that you think would be interesting, like to bring to Brazilian?
So I think, specific to the Brazilian market, I just was doing some research on sort of the global landscape. Brazil has 2% of the world's ETFs by number, but with about 12 to 13 billion in assets, it's laying the groundwork for growth in the ETF marketplace. And I've had a great week here in Sao Paulo, talking to a lot of investors, and the enthusiasm for ETFs is real. I think of it as sort of planting a field, right? You need to till the soil, you need to plant the seed, and a lot of times that growth is not seen. Plants grow underground for some time before you see any evidence of the growth. And I think that's what we're seeing in the Brazilian market. These ETFs that are out there are the seeds that have been planted. These conversations, other conversations with having investors, are fertilizing that and sort of generating the interest in the ETFs. And I think for the Brazilian investors to see what's possible, looking at the American market and the growth we've seen there. And I think over time we will see those, even if you don't see the growth now and the assets now, those will start to sprout. And I think you will see the Brazilian ETF market really start to take off, because the product set that's out there is really interesting, and it's great for Brazilian investors.
Now, we talked a lot about trends. How can you tell when one of these, let's say, trends becomes mainstream and it's not just hype, let's say?
Yeah, and that's a great question. We actually were hosting a panel early, and I asked that exact question to one of my panelists. So without that, it becomes really hype, right? If you're just chasing the latest hot dot and latest trend, but there's no real economic reason. The only reason you're buying it is because everybody else bought it. To me, that's not a real trend. Something like cybersecurity or renewables or the clean grid, those are very real economic drivers behind them. And so that, to me, that defines a trend. And then you start to see capital getting attracted to that because the returns are there. There's a fundamental reason why they should be generating returns. They're providing a real utility. And that's when it becomes a trend versus hype. So you look at the flows, you look at the investment rationale, and that helps to separate sort of the signal from some of the noise that's out there.
Final message to the Brazilian investors?
Yeah, I mean, I think the future is bright. Like I said, 2% of the world's ETFs outside of the US, if you look at the rest of the world. So, the groundwork is being laid now. I think companies like Webull are doing a great job doing events like this to help improve investor education and to show the art of what's possible out there, looking to the U.S. and the growth we've seen. And it's a global interconnected economy. So to the extent that the U.S. is growing, the rest of the world actually is growing even a little faster than the U.S. if you look at the assets and the number of funds. So the growth is everywhere, and I think that's a good thing because it gives more options for investors.
Great. Salvatore, thank you very much for your time. Very rich information you brought to us here. And next time you come to Brazil, you are invited again.
Thank you. I appreciate that. It was great talking to you.
And if you want to know more about Nasdaq 100 and some of the most relevant companies that are part of the index, don't miss a special playlist we have here at the Webull YouTube channel. Here we bring original contents produced by Nasdaq about the Nasdaq 100 companies. You can find it by clicking in the card up here. And don't forget to subscribe to the Webull Brazil YouTube channel. Thank you and see you next time.